Good afternoon, everybody. Today is Friday, the 6th of January, 2012. Let's take a look at this market. And we had a decent week here, of course. The S&P 500 for the week, the month, and the year so far is up 1.7%. The Nasdaq about double that. So good relative strength from the Nasdaq, and so off to a solid start for the year. But, we can just work with the information that we have, the best information available right now. And it's still not in all clear market. We have some potential for some resistance just ahead, right up at about, we'll just call it 130 there, at this prior, what was a pretty important level last year, at that 130 level. And we had seen some resistance in that area as well back in early November or late October. So 130 is where it looks like the S&P 500 has the potential to go. We've been seeing these higher lows, and we've been looking at a shorter term trend line that looked like this, that was just broken this week. And of course, we've also been talking about this inverted head and shoulders pattern. And we broke the neckline of that inverted head and shoulders pattern. So we take the height of this pattern and add it to the breakout point, and that gives us an approximate upside target of about 138. As I've been stressing, it doesn't mean that we're going to expect to just buy here and sell at 138. That's a potential objective target, objective for the market to get to. But if we start breaking down, then we have to work with the information that's best information that's available to us at the moment, and the market changes obviously. For the 4 days of this week, we can see here this is the volume weighted average price. We of course had that big gap higher on Tuesday. We held the rising 5-day moving average after this pattern of lower highs and lower lows was broken on Thursday. And for the week, we saw the average price, that is the volume weighted average price for the S&P 500 for the SPY, was right here at about 127.60. So that looks like a level to measure some risk against for now. I think that these two lows, in particular the 126.45, are what looks like the basis of our higher lows. If we can break above this week's highs, then at, near about 128.45, then it looks like we should be headed for at least a test of 129.5 to 130. So as long as we maintain above these support levels, and really this is the one I would be most focused on early next week, is about 127 and a quarter. If we can stay above 127 and a quarter, that's about where we have that rising 5-day moving average as well. Then and then we break a little bit of resistance here. It looks like we're headed for 129.5, 130. The Nasdaq, again, it was up 3.5%, so much better percentage gain, and it was up today as well. We can see that we had that gap higher in here. We'd broken the downtrend line, and back above the 50-day moving average. And let's just go back to the S&P for a moment, because we of course are just closing above that 200-day moving average as well. And this is 4 days above it now. We haven't seen that type of close above the 200-day moving average since just before the market fell apart on the U.S. downgrade back in July and August. Anyways, back to the Nasdaq here. Let's take a look at a shorter-term daily time frame. We broke out of this triangle, and we were looking for the potential resistance at 56.5, or 57.5 rather. The market did continue to move higher through there. If we take a look at the volume weighted average price for the week, you can see we're well above it down, which is at about 57 and a quarter, whereas the S&P 500 were basically finishing right on that volume weighted average price. So that just helps kind of confirm, I guess, that relative strength that we're seeing from the Nasdaq. We had seen more of a time correction in here, and of course yesterday we broke past this 57.20 level. We'll want to see 57.20 hold as support, and then just below that, of course, we have 56.50, and the bigger level that this market had really been battling for a while was 56 even. So 56 even will continue to be important. Then 56, and then I think that this prior resistance at 57 and a quarter looks like it should hold as support, is what we would look for to potentially hold as support. This 57.50 1150-ish area. We'll see how the market acts along this level as well, but I wouldn't be surprised or concerned to see it come back down to about 57 and a quarter. Our next upward objective for the Nasdaq would probably be these highs back in mid-November or early November at about 58 and a half, and then we'd be headed up towards that 59 level. And 59, as we know, is just short of the 10-year high basically for the Nasdaq. So we've got a decade-long level that we haven't been above, and really the market holds pretty well up in this area. So we've seen a lot of choppy action over the last year, but the market holds up. It's not looking like distribution that's going to break down, but of course we always have to be prepared for that. The Russell 2000 still kind of lagging a little bit in here. If we take a look at the percentage movement here, it's 1.4% for the week, and we're holding above that 150-day moving average that had given this market trouble for several couple months, and the 200-day moving average, as we've been noting, is just above it, about 76, and then we've got this bigger level of prior support, which did touch his resistance as well at 77. So the 200-day moving average and 76 are the first which should be a barrier to further upside, or a little bit of potential resistance in there. But if we can get past that 56 level, then it looks like we're heading for 76. Then it looks like we should be heading for $77 a share. This Russell though has just been a lot choppier, and it seems like it wants to go, but it might need to get above 75.50, 75.45 for the strength to really hold, and then we would want to see maybe about the 74.60 to hold if it made such a higher high at about 75.45. So it's still kind of setting up in here, really more neutral, but with a rising 10, 20, and 50-day moving average and a declining 150 and 200-day moving average, we're still getting mixed signals, and we have this big prior support level that has the potential to become resistance. So we can't just rush out and get all bullish. Same goes true for the semiconductors. We know that 30 and a half was a big level of focus. The market obviously made it above that level this week on the gap. Monday we came, so the volume weighted average price in here was about 31. It gapped higher on Tuesday. We had a little bit of an orderly pullback to this prior support, and now we're right back up near the highs for the week, close to this $31.30 level, and pushing through that. Well, we've got 31 and a half just above 31.60, but it's getting to be more neutral to slightly positive, but just can't trust it fully with a declining 150 and 200-day moving average. The financials had a good week. What was their percentage move? Let's take a look. 3%. So financials were up 3%. They made it through the 150-day moving average. If you look at that, it hasn't been above it since back in here. That is mid-May. That's the green moving average that we're looking at, and it appears as though we're headed for probably $14 on the financials. That's a prior level of somewhat resistance in there, but we've got that downtrend line from all of last year, and we've got just in that level is that declining 200-day moving average as well. So that kind of seems like the market should be magnetized to that level, but it's all going to be dependent upon, can this market continue to it broke the downtrend line here that's set up over the last week and a half, and we can kind of draw an inverted head and shoulders pattern in here as well. The height of that pattern is about $1.50. So if we took that dollar, that's actually, I'm sorry, $1 from 11 and a half, $2. What am I talking about? So giving us a target up near 15, which seems kind of excessive to me. I wouldn't be that bullish, but if we can make a pattern of higher highs and higher lows, we did hold above that 1310 level, which was important this week, and just right now, the more important level early next week will be 1330, followed by 13 and a dime, and then of course the bigger level that this market has spent several months really battling with is that 12 1280 level. I would hope and think that we don't break down through that 1280 or down to that 1280 level or down through the 1310 level next week. But again, it's, we've got the declining 200-day moving average, declining 150-day moving average. So we still have to look at this with an eye of suspicion. But when you see a nice pattern of higher highs and higher lows above a rising 5-day moving average, the intermediate term is considered innocent until proven guilty, but it comes within the context of a bigger picture that's more difficult to trust here on the weekly time frame. So unfortunately, it still means we have a lot of indecision in this market, and it's not time still to be taking large bets. Hope everyone has a good weekend. Thanks for tuning in.